4:30 p.m. I will call the Personnel Committee meeting to order. First on the agenda, courtesy of the floor. Is there any courtesy of the floor? Seeing none. The second item on the agenda is review of county executive's reappointment for the Drug and Alcohol Advisory Board, Mental Health, Early Intervention and Development Advisory Board, Personnel Appeals Board. First, Michael Andre, Catasauqua, PA 18032. Mr. Andre is being considered for a 2-year term to begin July 1, 2025 and to end June 30th, 2027. And this appointment is for the Drug and Alcohol Advisory Board. Can I have a motion to move to the agenda?
Motion. I'm not on, am I on the Personnel Committee? I don't even know if I am.
Motion to move forward.
There you go, Lori.
Thank you, Lori. Second is recommendation for reappointment to the Mental Health, Early Intervention, and Developmental Programs Advisory Board. Reappointment for Arlene J. LaSalle Lund, Bethlehem, PA 18017. Ms. Lund is being considered for a 3-year term to begin July 21, 2025 and end July 22nd, 2028. Any questions, comments? Next, we have...
Motion to move forward.
Thank you. Next, we have recommendation for reappointment to the Personnel Appeals Board. Reappointment, Anthony Tony Pristash, Northampton, PA 18067. Mr. Pristash is being considered for a 2-year term to begin March 17th, 2025 and to end February 3rd, 2027. Questions, comments?
Motion to move forward.
Thank you. I believe that is all. Is that right? Okay, that was the last of that. All right. Motion to adjourn.
So moved.
Thank you.
Who's handling finance?
I don't know, but Mr. Rinsky's not here.
Do we know who's handling finance committee? Oh, okay. Do you know who's running it from the dais here?
I assumed it was either one of you. I'm not sure which.
Oh, okay. Would like to? Mr. Kapoor, feel free. You're doing a great job so far. Go ahead.
Okay. All right, it is now 4:33. We will call the Finance Committee meeting to order. First on the agenda, courtesy of the floor. Is there any courtesy of the floor? Seeing none, there was a request to remove the controller's reports ahead of the presentation, so let's begin with that. Are you ready, sir? Yes. Okay. We will begin with AUP Hotel Tax Grant, Arts Quest Turn and Grind Shop, and Community Culture Center Project.
Hi, my name's Mark Arn. I'm the Deputy Controller. Tara sends her apologies. She had a conflict and was not able to be here today to present these reports, so I'm here instead. So we have 6, and I'm going to try to go through them pretty quickly because I know you have other things to do. So the first one, as was said, is the hotel tax grant to Arts Quest with respect to the Turn and Grind Shop and the Community Cultural Center project. This audit was conducted as an agreed-upon procedures engagement, and the procedures that were involved included the following. Procedure 1, confirm that funds were held in a separate FDIC-insured financial institution and that no bank fees were paid out of this account. Our findings, grant funds have been deposited into and are being held in a separate FDIC-insured institution. However, the grantee did not deposit the January 2023 payment of grant funds from the corporate account to this account until July 2024. As of December 31, 2023, bank fees in the amount of $1,245.61 had been paid from this account. DCED does not object to the bank fees as they are a consequence of DCED's requirement that these funds be held in a separate account from the corporate account. Second procedure, confirm that all funds were expended by the end of the project term. This step will only be performed in the final year of the grant. The end of the project term is December 31, 2030, so not time to do that procedure yet. We inspected documentation for all fund expenditures. That was the procedure, but in fact, there were no expenditures yet as of the period of this audit. There have been since then, but as of the period of this audit, which was as of December 31, 2023, there had been no expenditures at that point. Procedure, confirm that an annual report was submitted to the county on or before March 31 of each year, as outlined in the grant agreement, and any amendments. Ensure that all amounts included in the reports are supported. Confirm that audited financial statements were submitted as required. Annual interim reports were submitted in a timely manner, each of which complied with the terms of the agreement. There were no project expenditures in 22 or 23, and ArtsQuit submitted its audited financial statements as required for that time period. Confirm that the grantee has complied with all contracting requirements outlined in the grant. ArtsQuest did not execute any bids for either project. ArtsQuest did not fully comply with all of the contract requirements as follows. Certificates of insurance did not include the additional insured language for the benefit of the county for one of the years under question, and the county was not named as an additional insurer on all the coverage that it was supposed to be, insurance coverage as it was supposed to be named. So those were our findings, and I completed that audit on behalf of the office. Audit number 2, cash collection process, Public Works. This audit was also conducted as an agreed-upon procedures engagement. Procedure 1, review cash collection work assignments to determine if a proper segregation of duties is in place. The finding, internal controls and segregation of duties over the cash and check handling functions are adequate. Select a sample of 5 receipts and verify that they were deposited in the same day as received and that the cash check mix agrees to the validated deposit slip. All documentation for deposits tested agreed to the validated deposit slips. 4 out of 5 receipts were deposited on the same day, while the remaining receipt was deposited 44 days after it was received. Procedure 3, for offices with bank accounts, determine whether bank reconciliations are done on a monthly basis and reviewed by a supervisor. Confirm that account balances agree to one solution documentation and sample 5 disbursements in the form of canceled checks to verify the payee amount and authorized signer. Our findings, the Parks and Recreation Office has 1 bank account associated with the general fund. All 6 bank reconciliations inspected were completed by park specialists and reviewed by the supervisor. January and April bank statements were reconciled in March and June, respectively. All others were reconciled in the months immediately subsequent to the statement date. That audit was completed by Mark Diliberto, Auditor 2. Third audit, Cash Collection Process Fiscal Affairs Division. This audit was also conducted as an agreed-upon procedures engagement. First procedure, review cash collection work assignments to determine if a proper segregation of duties in place. The segregation of duties provides adequate controls over cash. This was tested in the main office as well as at the satellite office at the Human Services Building. Procedure 2, select a sample of 5 receipts and verify that they were deposited on the same day as received and that the cash check mix agrees to the validated deposit slip. A sample of 5 receipts was selected, including receipts from the revenue offices on both the common and licensed bank accounts. All documentation for the deposits tested agreed to the validated deposit slips. All 5 receipts were deposited on the same day and reviewed by someone other than the person making the deposit. The Revenue Division does not have any bank accounts, so there was no reason to test the bank accounts. audit number 4. Another AUP for the jail commissary and inmate telephone. This was conducted with the cooperation of Mike Pitaro and the Director of Corrections, and it's an audit that we're required to do under Title 37 of the Pennsylvania Code. Procedure 1, determine if inmates are being charged the correct amount for items purchased in the commissary. Finding charges are correct and match with the corresponding item price in the Keefe price list. For all 30 selected items, the item total on individual receipts matches with that of the commissary history report. No items in the sample were found missing. Procedure 2, determine if inmates are signing their order slips acknowledging receipt of what they ordered. Of a sample of 30 receipts, 28 were found and signed by inmates. Keefe's employees were unable to locate the other 2 original receipts. Therefore, it could not be determined if the receipts were properly signed by inmates. Procedure number 3, determine if grievance resolution efforts by Keefe are monitored by jail personnel. Findings, grievance reports, if any, are forwarded to jail management by Keefe. Most of the grievances are credit issues, which are handled between the Keefe employee who is employed in the jail and handles these issues immediately. No errors or concerns were found in our refund testing. Procedure 4, determine if rates charged by Global Tellink for inmate telephone calls are in line with FCC guidelines. Finding, inmates are being charged phone rates on a 16-cent per minute basis by the jail's phone service provider. This is compliant with the FCC guidelines as in effect during the time of the audit. And that was completed by Amna Asan, who is one of our lead auditors. All right. Number 5, I think, is where we are. This is a performance audit, so this is not an AUP. This is not an agreed-upon procedures audit. This is a performance audit. And this audit was conducted of the Register of Wills and Orphans Court agency funds with an audit period as of June 30, 2024. The Orphans Court is responsible for processing documents pertaining to adoptions and termination of parental rights, guardianships for minors, and adjudications of incapacity, and other dependency matters relating to juveniles. The office also maintains the accounting and distribution of estates scheduled for audit by the court. Escrow accounts are held by the office pending distribution by court order. The Orphans Court is also responsible for maintaining records of marriages and issuing marriage licenses and certificates. Birth and death records from 1893 to 1936 are on file in this office, and certificates are issued upon request. The Commonwealth of Pennsylvania's Bureau of Vital Statistics maintains the information for subsequent years. In order to account for payments related to the County of Northampton, the Register of Wills and the Orphans Court together maintain a separate agency fund used to account for receipts and disbursements of fees and other amounts collected, which are ultimately owed to the Commonwealth of Pennsylvania, the County of Northampton, and other entities. So the purpose of the audit was to assess internal controls, compliance with law and regulations, and the efficiency of financial processes related to the receipt and disbursement of funds. The scope of our audit included receipts and disbursements to Register of Wills, the Orphans Court, and inheritance tax that occurred between August 1, 2023 and June 30, 2024. The following components of internal control were considered significant to the audit objectives and were therefore assessed and as appropriate based on the risk tested. So the first test determined if receipts for services provided by Orphans and Wills and processed through County Fusion are deposited intact daily to the correct account, coded correctly to one solution, and posted correctly to Daily Cash Summary. Second one that we're going to look at, determine if receipts for an inheritance tax processed through County Fusion are deposited intact daily to the correct account and posted directly to the daily register. Third one we're going to look at, determine if monthly disbursements to the state are for the correct amount and are sent timely. And finally, verify that the figures posted to One Solution on 6/30/2024 for the Orphans Wills Agency funds are accurate. We did all that, and our key finding or a key observation was that there's a significant increase in outstanding receivables related to additional probate fees, rising from 50.55% to 21% of total fees, and in the total amount of $26,623. This delay in collecting these receivables was due to a staffing transition that temporarily halted the collection process. When probate is filed for an estate, an estimated probate fee is charged based on the estimated value of the estate. When the final value of the estate is determined by the state, the Register of Wills receives a notice of inheritance tax appraisement, allowance or disallowance, an assessment of tax form, it's a long name for a tax form, from the state. The Register of Wills then has the opportunity to bill the executor for an additional probate fee if the final value of an estate is greater than the estimated value. The accountant then follows up to ensure collection of those additional fees. So, corrective action that was taken. Management and accountant promptly addressed the issue during the audit by sending multiple follow-up notices. Uncollected balances after a third attempt were escalated to the solicitor's office and sent via certified mail, resulting in improved operational efficiency and resulting in revenue collected. The audit concluded that the Register of Wills and Orphans Court divisions are operating efficiently with strong internal controls and compliance with applicable regulations, and the issue that was found was addressed and corrected by management during field work. Internal controls over cash receipts, disbursements, and cash account are functioning as intended. No further action is required at this time. And this audit was conducted by Gada Gurgis, who is also a lead auditor for us. Take a deep breath. Finally, number 6. This is one of our typical hotel tax audits. This one was the Hotel Bethlehem. It was for the period January 1, 2023 to December 31, 2024. This is an agreed upon procedures audit, as are all of the hotels. And our findings were that the hotel room rental tax calculations for the 24-month period under investigation were accurate. Remittance reports were received by the 20th of the month for all remittances. The operator paid the higher amount of the tax collected versus tax due for all 24 months. Further, we inspected all remittance forms submitted during the period and compared them to the operator's financial reports and found that the operator accurately reported the room revenue and hotel room rental taxes for the 24-month period. The operator did not claim any exemptions during the 24-month period, so we didn't test any exemptions. We determined that license 101 Hotel Bethlehem does not owe any additional hotel room taxes to Northampton County. And that audit was completed by Florina Tang, Auditor 1. That hereby ends our report.
Any questions on any of the audits? Thank you.
Thank you.
Chairman Brown has now arrived, so I am turning the committee over to him.
Thank you. Did we hear from Mara Dusel?
No. We flip-flopped.
Thank you. Why don't we go ahead and have the presentation?
One audit to the next. Good afternoon, everyone. I'm Jennifer Kruver-Kibbe, the engagement partner on the county audit, and the presentation handouts are very similar to the past several years. So the first at the door. I'm pushing the right button.
Hello? Hello?
Hello, Ron.
We're trying to
okay.
advance the slides. You're not missing anything.
Okay, fair enough. I just got back, doctor, so I'm a little out of breath.
But the first series of slides were just a synopsis of the letter that we always address to the county every year. And that is a letter that's required in accordance with our auditing standards. It's called the Communication to Those Charged with Governance. So on page 2, if you have the handouts, we talk about our responsibility under generally accepting accounting standards and the government auditing standards. Because remember, every year, the county expends more than $750,000 of federal funds. And because of that, you have to have a uniform guidance audit, or what we call single audit. We're currently working on that audit right now. That's where we pick several major programs. We do a lot of testing over internal control and compliance. This year, we have 6 to test, which is the most we've had, but we'll make sure to get that done before the 9/30 submission to the federal government. So that's why we perform the government auditing standards, because it's required in accordance with uniform guidance. We also issue the annual comprehensive financial report, and it's the larger set of the financial statements that's submitted to the GFOA, and that's to receive the certification annually. So that submission was submitted to GFOA by June 30th. So I'm excited to report that there was no extensions that need to be required to be filed. So, and the certificate was obtained in 2023, and we expect the same certificate to be obtained in 2024. And it's a big accomplishment because in addition to your general purpose financial statements, there's a lot more information that has to be required. So it's a lot of information that your management has to pull together and write. So it's a great document to provide. But our responsibility is to express opinions about whether the financial statements prepared by management are fairly presented in all material respects in conformity with the accounting principles generally accepted in the United States of America. That's what we call GAAP. So that is how the financial statements in front of you are performed. But the responsibilities of the financial statements themselves rest with management. Similar to previous year, the county's financial statements do include the Northampton County General Purpose Authority that is audited by other auditors, so we rely on the report. We receive the financial statements. We're not aware of any issues. They do receive an unmodified opinion, but all that information rolls up into the county report, and it's shown as a separate column within the county report. The biggest change looking at the financial statements for this year is the county had to adopt 2 new standards, the Government Accounting Standards Board, that's GASB. They never rest. They keep coming out with new pronouncements. And all governments had to adopt GASB 100, which had to do with if there's any error corrections or changes going from a major fund to a non-major fund, which did occur. The drug and alcohol fund previously was a non-major fund, but it met the threshold and had to be shown as a separate column. So if you see wording about change of reporting entity, that's why. It's just telling a financial statement user it moves to one page to another one. There was also another standard called GASB 101, talking about compensated absences. So it changed how those liabilities had to accrue, explicit definition, but the county adopted that, but there was no significant material impact. So no big changes to dollar amounts that we have to report to that, but just wanted to let you know those 2 new standards were adopted. Yeah, thank you. So this slide summarizes the accounting estimates. The estimates are an integral part of the financial statements. They affect the dollar amounts in the financial statement disclosures themselves. These are all the same estimates as the previous year. So these are deemed sensitive estimates. They include the Authority P3 Bridge Rehab Project and the related liabilities, the fair value of investments, and actuarial measurements and assumptions for the county's pension and other post-employment benefit plans, because those are all performed by your actuarial based upon one point in time, and they have a long list of all these actual assumptions. Everything's disclosed in your financial statements, but all of that is reported within there. And also sensitive estimate for the loss reserve for employee health care and workers' compensation and the Health Choices Program claims. We evaluate these key factors and assumptions. We deem them to be reasonable, so no issues with these estimates that the county utilizes. So if there are certain financial statements that are deemed sensitive. We do bring that to your attention in this communication letter. There was a new disclosure included within Note 1 that references the 2024 general fund budget adjustment, talking about that the general fund transfer to Graysdale exceeded the final adopted budget, which I'll talk a little about later. And the financial statement disclosures are neutral and consistent and clear. We did not encounter any significant difficulty in working with management. We received the information timely in order to perform our audit procedures. Next slide, please. Thank you. So the rest of these communications, the professional standards require us to accumulate any misstatements that we come across, and as part of our audit procedures, we did not have to propose any material adjustments. So there's no adjusting journal entries that the county had to prepare for us. Everything that was recorded was proper in accordance with GAAP. We did receive a representation letter in order to issue the final report. We're not aware of any consultation with other accountants that would arise to try to obtain a second level of opinion. We generally discuss a variety of matters, including the application of accounting principles and auditing standards prior to retention, but those are the normal course of our professional relationship, not contingent upon our retention. And there's also supplementary information that's required to be included in the report. There's historical pension and other post-employment benefit information, the management discussion analysis, which is a great document to review to see significant fluctuations from prior year to current year, as well as supplementary information. There's combining schedules included in a report. We do not opine on the required supplementary information, but we do opine on, we give it in relation to opinion on the supplementary information. So nothing that we saw coming across that information to deem it to be unreasonable. So the next slide are the results of the audit itself. So the independent auditor's report, which that's the only portion of the report that is ours, the rest is the county's. We gave an unmodified opinion. That is the best opinion that the county can receive. We stated that in our opinion, based on our audit and the report of the other auditors, the financial statements present fairly in all material respects in accordance with GAAP. As I mentioned, in that opinion, you'll see the wording that we do not audit the authority. We're relying on that. The authority also is not performed in accordance with government auditing standards. It doesn't change the impact of the report itself. Now, we did present a finding within the report. It's finding 2024-001 on the unbudgeted transfer from the general fund without the budget amendment. That's on page 100 if you have the general purpose financial statements in front of you. So as I mentioned, because the county's audit is required to be performed in accordance with the government auditing standards, if we come across any material non-compliance, we do have to report that. And because the dollar amount, that's the only reason we had to trigger and include that finding within the financial statements. So the condition, we noted that the county made an unbudgeted transfer of approximately $9.9 million from the general fund to the Graysdale to cover operating deficit. And that was, and the reference that we gave for the non-compliance was the Home Charter Rule, Section 705. And within that report, management did provide a response to correct that going forward and to evaluate it in the future. And I already mentioned the required supplementary information that's included in the report. And go to the next slide, please. So I kind of highlighted on some of this information. There are several supplementary information disclosures included in the report. We did not come across any issues. There's also a couple documents included in the report that are not audited at all. We call it other information, the transmittal letter, and a couple of the Act First schedules. The next slide, please. So this slide summarizes some changes over the past 3 years for governmental activities. So looking at bird's eye view of the county financial statement, the governmental activities means it's full accrual. So this includes your long-term assets, it includes your long-term debt, it includes revenue on the full accrual basis, so on and so forth. And as I mentioned, the management discussion analysis is a great tool to review to gain more of an understanding of these changes. So for the change in net position, that's essentially the net income or net loss across all the funds, excluding your pension and OPEB, because those are trust funds. The total net position decreased by 14.1 million in 2024, and the ending amount was 174 million. I have another slide talking about the breakouts because there are 3 buckets that have to be shown for the net position. Debt decreased by 14 million during the year. The payments were made in accordance with the maturity schedules. There's no non-compliance issues there. Cash and investments decreased by 35.1 million due to the utilization of fund balance resources. And you can see the decrease in the revenues. Majority of that is because the spending of the American Rescue Plan in 2023 compared to 2024. So a majority of that was all in intergovernmental revenue. And the expenses also decreased by about 6%, also due to the timing of the expenses for the American Rescue Plan as well. Now, out of those expenses, approximately 84.5% relate to human services and court system and correction programs. Next slide, please. These graphs are taken right from the management's discussion analysis, so 2024 versus 2023. These charts are comparing governmental activities, revenue, and expenses for both years. And the statement of activities is a portion of the financial statements that shows the expenses and program revenues by department. So it's helpful for a user, a third party, to look and see, okay, for human services, how much grant revenue or charges for services come in versus the expenses go out. Of course, a lot of the programs that the county supports, you fund a lot of that through your real estate taxes. So it's important for a user to see that information. So on the revenue side, out of the total revenue, 59.3% is received from the federal and state governments in the form of grants, majority of which are recorded in your separate special revenue funds. Another 26.1 is received as tax revenue in the general fund and the hotel room rental tax fund, and 8.9 is fees, fines, and charges for services. On the expense side, I mentioned approximately 84.5% relate to the human services, core system, and correction programs. On the next slide, I talked about the change in your net position. So once again, this is the accumulated equity on a full accrual basis for all of the county's funds, excluding your pension trust and your pension and your OPEB trust. So this is a historical chart of the governmental activities net position. So in accordance with the GASB, out of that net position, you have to show it in 3 different buckets. Net investment in capital assets, which takes all of your capital assets and related assets and offsets it against the debt that's related to it. And out of that, for 2024, that total net position, 72% of that is in that bucket, the net investment in capital assets. 39% is restricted, so restricted would be from outside sources. A majority of those restrictions are due to your grant agreements. And then the rest is unrestricted. So the biggest change in 2024, the unrestricted went from a positive balance to a negative balance, a negative 11.9. And that was a decrease of 36 million when you were looking at the change in the unrestricted net position balance. The next slide focuses just on the general fund, so which is the county's chief operating fund and includes the on the current resources method. So the revenues recorded a little different. On your general fund, you don't show your long-term assets, you don't show your long-term liabilities, and the revenue is recorded when it's available. So if money comes in halfway through the year, technically you wouldn't see it as revenue hitting here. That's the biggest difference between the gap for governments. On the change in fund balance, the fund balance for your general fund did decrease by 27 million. I noticed I mentioned there was a large decrease in the grant revenue during the year, and there were some decreases in the expenses as well due to the spending down of the American Rescue Plan, and then the general fund transfer out did increase during the year to the general fund. On the next slide is a breakout of your fund balance for your general fund. So the blue is assigned, so what that means is internally it's assigned for some type of spending. A majority of that is 2025. That is how the 2025 budget was balanced. 84% is deemed assigned, and the rest is for the remaining American Rescue Plan money. And then 24%, which is the green, is unassigned. and that's 7.8 million. And that's the full amount of the financial stabilization funds, and that's in accordance with the ordinance number 526. And that is all that I had to cover. Did anybody have any questions over the audit itself?
Thank you, Mr. Brown. If we can go back to the results really quick. I'm wondering if you can you provide a definition as to what an unmodified opinion actually is?
Yes. So unmodified is the best you can receive. When you have a modified opinion, it says, we performed your audit, we agree with everything, everything's materially correct except for expenses, except it gives some kind of qualification or except for exceptions. So it sounds strange, but unmodified is the best one that we can give.
Yeah, and we received an unmodified audit.
Yes.
We did, which is the highest rating that you can actually get, correct?
Correct.
This is good news.
Yes.
Okay, this is good news. So, and not that by any stretch of the imagination you have been watching recent council meetings as it pertains to the Graysdale issue that we've been discussing a lot on this dais here. Stuff about the Graysdale audit adjustment, it didn't affect your overall opinion, correct?
Correct. No.
Okay, all right. All right, thank you.
You're welcome.
John?
I have a question.
The unmodified adjustment or the unmodified rating, that is basically stating that the way we keep our books is up to your standards and the way we kept them are truthful, correct?
What it is in accordance with the auditing standards that we have to apply and how the financial statements were presented to us, they were materially correct.
So you found that we had a $10 million, $9.9 million budget adjustment that wasn't brought through council. That was your note, and you also noted that we went through $24 million in fund balance, correct?
Correct.
And that was my concern. You can say it's not like it's our credit rating. It's just stating that the audit was saying that those statements were true.
Yeah, correct.
Ron?
Yeah, thank you. To just follow up on both the previous gentlemen, but sorry I'm not there. The part about Graysdale, which has been discussed quite a bit, I think it's important to note that from an auditor's point of view, the numbers added up, everything worked out, correct?
Correct. We did not have any material issues with how revenue was recorded, how expenses went out. We did not have any amounts that were unaccounted for as part of our audit. Of course, we perform on a sampling method. We perform the revenue and expense testing differently in different ways, but we did not come across anything that would have excluded us from giving an unmodified opinion.
Okay, that does not take into account the fact that you noted that as per our home rule charter and our code, that that was about finances, but the procedure itself on how that money was put there, that was not part of your audit. If it was done in accordance with county law or not, correct?
Correct. Because we have to evaluate whether there's any potential non-compliance with direct material laws or regulations, which would be the home charter code. So that's because that dollar amount, that's why we report as a non-compliance finding, but still doesn't change an unmodified opinion. Doesn't mean that we question that many costs. It's just that the amount was in excess of the budget.
All right. So yeah, without using a lot of words, I just want to get clear because we get caught up in the trees a lot, and we miss the forest. All the numbers worked, but you're not rendering an opinion on the process used to move the $9.9 million there to Graysdale, are you?
That's correct. We do not issue an opinion on that.
Okay, so I mean that is a separate issue, whether or not county procedural efforts were used. But from a financial standpoint, the pluses and minuses, the ones and the zeros, all worked out in the end, correct?
Correct. Within our materiality, that is correct.
All right. Well, I'm just trying to break it down into fundamental English. You know, it's I hear you. I've been through a lot of audits, and the other thing I wanted to ask you, excuse me. Now, in your audit, and I don't have it here in front of me. It's a long story. You don't need to hear. But anyway, the money from the federal government that we received, that was part of your audit, correct?
Yes, and we do.
I mean, the extra money.
Is that for the American Rescue Plan?
Yes, yes.
Yes, yeah. A majority of that spending took place in 2023. So when we performed the single audit, actually for the past 2 years, we did test that as a major program. So what that means is for how the county spent the ARPA funding in previous years, we would have tested for allowability, control, and compliance work. But that was part of the single audit.
Now, are you able, from your audit, to tell exactly how much of that money is left?
In 2024, the actual spending that was reported to the federal government, I believe it was spent in full. I can't remember if it was spent in full in 24. So the spending is reported to the federal government through the U.S. Treasury reports. And I believe it was fully spent in 2024, but I wonder if, okay. I was looking at Steve to make sure.
Is it correct that we may not spend it, but we have to show the allocation? That in fact we have allocated it for a specific purpose, and even if we haven't spent it yet, they'll accept that. Is that correct?
No, Ron, that is not correct. The money must be spent within 2024. We have taken that money as revenue replacement. While there is budgeted money and we are talking about that and accounting for that money separately within the budget, it does not reflect in our financial statements. The money is still there, but it does not reflect in our financial statements that, or in any reporting, that we're spending that money on other things. We have taken it as revenue replacement, and as of today, the federal government has closed us out. Now, there are issues with the website, as Mr. Brown has pointed out, where we said in the very, very beginning we weren't taking revenue replacement, but between the first Trump administration, the Biden administration, and then the new Trump administration, the reporting on that money is very, very difficult within their Salesforce system. And we worked very, very difficult. We worked very, very hard with Treasury to close everything out. So we are officially closed out.
So we have zero amount anymore of rescue money at the county.
We do have money. It is all reported for, and Mr. Heckman, if you read the budget, you will see what money is left. You will see what money is out there, and when we do the budget hearings this year, you will see how the rescue money was spent, where council's resolutions lie, and where we are at with those funds within the budget. That will be presented to you in the budget when we present it October 3rd at Graysdale, and throughout the subsequent budget hearings. Totally different from what we're doing here.
Well, I can still ask the question, can I?
Oh, absolutely, and that's why I'm answering it for you, sir. Yep.
All right, so in other words, we have to do the pomp and circumstance. If I ask a simple question like, how much federal rescue money do we actually have left right now?
About $3 or $4 million, Ron. Ballpark, about $3 or $4 million.
Bingo. Answer. Thank you. All right, you can put the lady who's doing the report back on.
Any other questions or comments?
My comment is that I adore Ron Heckman. Thank you.
Thanks, Lori. I appreciate that. So I'm going to just go back to the Graysdale issue since I raised this all along. Your audit report basically verifying where the monies went, where they came from, and the fact that the Home Rule Charter was not followed relative to how those monies were moved, but you're not making any opinion or comment on that particular aspect. It's just a footnote in the management statement.
That is correct, and because there was a non-compliance finding attached to that, just because it was over budget.
Right. And so you are putting in there that they should have followed other protocols. They did not follow those protocols, but that's not your domain to comment further on.
Correct, yeah, ours is to state the facts what the Home Rule Charter says.
So in the movement of the money, though, in the impact on the budgeting of the budget is passed for 2025, but they took monies out of 2024's flows in order to do this, to make this transfer, which then changed the committed, uncommitted, unassigned balances that were available, reported at the end of 2024. So does that have any impact? Do you even look at that relative to how it rolls forward? Because that's part of the commitments that are made that, these are assigned, you can't, or the various categories of funds that are available. The unassigned is what should be used, and yet now, because of these illegal transfers, that there's a negative unassigned balance, which means they spent money and moved money they didn't technically have categorically available.
So what we looked at for the 2024 report is because the general fund had to make up that deficit, after that, because essentially it's an audit entry from our standpoint. We don't think about the flow of funds. It's just the report that's presented to us. So once that audit entry is made, is the general fund unassigned balance still in compliance with the ordinance for your financial stabilization fund? So yes, we did look at that, and because of the amendment that was done, that did allow it to still be in compliance for the 2024 report.
So you're just commenting on the requirement to maintain the financial stabilization fund, not that the fact that funds could have moved out of any of these other pots in the transfer, basically.
Correct, yes, because we're not looking at the flow of the
So
funds.
the fact that unassigned monies were not available and they moved it technically on the books is not something you're commenting on.
Correct.
Other than that the financial stabilization remained at the 7.8 or 7.6 million that was required by code.
Correct, because we were looking at the amounts as of 12/31/24.
And then you put obviously management has a chance to comment, and I read their comment letter, so that they move the monies and they using the comment of 2013-14, which Mr. Barron said that this was done back then, so therefore we're in the spirit of that. But in 2013-2014 that they're referencing, there was accrued or anticipated collections of receivables that were not collected by the end of 12/31, but within 90 days you're able to claim those funds and use that as part of an adjustment. Is that correct?
For the revenue recognition?
Yes.
Yes,
Right.
yes, for the fund itself, yes.
So I want to put on record, the comment in the management letter is erroneous, because there were, in your report, or in this audit, there were none of those accrued funds for revenue at the end of the year that they could have used to make this adjustment on the balance sheet.
So in the Graysdale Fund itself, there's an amount that's shown as deferred inflows. So that is the portion of receivable that's technically not available. So technically that dollar amount was deemed collectible, but not recorded as revenue. So that portion, which I think may have been 1.4 million, technically would have been available. It's just how it's presented within the report.
There wasn't 10 million of it available.
Correct.
Any other questions or comments?
Yeah, I'm a little confused. You're using words like illegal, but I hear still in compliance. So what, is it illegal? Was something done
The
illegally?
Home Rule Charter guidance, just to clarify, was not followed as reported by the auditor. Section 5 was not followed. So yes, I use the word illegal because it violates the Home Rule Charter.
And Ms. Keegan, it's not illegal. I'm still here. I'm not in jail.
Yeah,
And
it's
quite
really-
quite honestly, I hate those words. I respect Jen here, and I'm not going to try to say your last name. I would use her last name if I could say it.
Jen the auditor.
Jen the auditor. Miss the auditor, then. Honestly, had I known we needed a budget amendment, I bring them to you. When I know there's something going on in the budget, I bring it to you. One of the things Mr. Brown used with Jen when he talked to her on the phone was the F word. And the F word in my world is fraud. There was no fraud. We cooperated throughout the entire audit. We talked about these situations. I made a management response. And one of the things Jen and I are talking about, we put on the calendar to speak in October, to look at Graysdale, to see that this is a situation, look at the amount of money that Graysdale may or may not need, look at the Home Rule Charter, talk with the solicitor's office, and then determine how best to move forward. We felt that using the prior period adjustment would be appropriate. However, this is a new auditor from the previous time this happened. They have a different opinion, and GAAP standards have changed. Therefore, we have a plan in place which you can read in the management letter. Nothing is illegal. Nothing is not transparent. And, we need to get the F word out of our mouth because I've had enough. Personally, and for the good of the county, we need to get it out of our mouth. That's not the case. Nothing illegal happened. I'm still here. No money was stolen. Nothing was taken. Knock it off. That's all. Thank you.
Yeah, I agree.
Comments? So in response then, basically, I do believe that the Home Rule Charter was violated. It violated the rights and the requirements that this body is the only body that can move monies around. Mr. Barron intentionally bypassed this body to move $10 million or $8.5 million. He brought a budget amendment eventually about 2 months ago to clean up what my word are illegal transfers relative to bypassing this body. And if that's okay with council, that you're going to authorize the director of finance, who would not own up to this for months, and now he's finally owning up to it, that is okay. That's this body's decision to make. I personally think it's wrong, and there should be repercussions for it going forward. So if there are no other questions or comments, thank you for your presentation.
Thank you. Take care.
John, excuse me, I have a question. I'm sorry.
Go ahead, Lori.
I just wanted her to highlight a little bit about the opioid settlement. And again, I just got back from traveling. I don't have my documents in front of me, but could she highlight a little bit about what was done with that money, or is that a separate audit?
So the opioid settlement monies, we don't perform, because they're not federal funding, so we don't have to perform specific compliance tests over how that money was spent. So the way we treat, and that's how we report in the Drug and Alcohol Fund, so the way we audit that fund is very similar to the other special revenue funds. So we look at expenses and revenue analytically for that fund in particular, because the receivable balance, and because there are multiple different settlements happening with the different types of pharmaceutical companies. So we make sure the receivable balance is accurate in accordance with the most recent settlement information that's received from the state. And then we review the revenue, so we make sure that the revenue comes in. Essentially, we confirm it. We make sure that that matches the schedule. And if there were material expenses within that fund, we will be looking at supporting documentation.
Do you have any recommendations for us as to how we should begin or look at those funds? As you said, because there will be different pools of money from different settlements?
I know there was an initial document talking about how the funding should be spent, which some of it could be, I don't want to say broad use, but I think just as long as the county's plan is within those guidelines, I think you should be fine.
Okay, thank you. Thank you, John.
Any follow-ups from there?
Yes.
So, three of the council members keep implying that there was some kind of fraud or malfeasance, but there was none.
Can't hear her. She's not on mic.
I'm sorry, I turned it off. So there's three county council people that keep saying that there was fraud or malfeasance and that there was missing money. We keep talking about this missing money, and there was no missing money, correct?
We're not aware of any material missing money. And the definition of fraud, what we have to follow, I mean, our job as auditors is not to find fraud. Everybody thinks that's their job. But the definition of fraud is intentional misappropriation of assets or fraudulent reporting. Management, controller's office, everybody was very transparent about the financial statement numbers the whole time. So we never felt there was cooking of the books. It was just the time. What makes Graysdale, auditing Graysdale, a little more complicated is the timing of the closeout. Because what's recorded as revenue, you have to look at receipts received 3 months subsequent to the year. So that number might change when they did their initial closeout in the middle of February versus when they finally close out the middle of April. So those dollar amounts did change. So I think that adds a little bit of complexity as to see what the true, if there is a deficit, what that is, because it should be based upon actual collections in subsequent year.
Okay, so there's no fraud, there's no missing money that we keep hearing about. And there was just, from what I hear, a technicality that Mr. Barron didn't do an amendment as opposed to he switched money over, which, I mean, I don't see anything illegal, but we keep using these strong words. So I just want to make sure you're an independent auditor, correct? For the people that are watching this. You're independent of Ms. Zirinsky. Okay. All right, thank you.
You're welcome.
Did you do an operational study or audit at Graysdale?
We do not. That's out of scope of our
So
audit.
when the retention bonus money that was earmarked for Graysdale, you did no looking into how that money was spent or where it was misspent? Okay.
No.
So there's two things that, Kelly, I stated that you said weren't true. I said money was misspent and we were in deficit. We are in a deficit. You missed the first portion of the report. We spent down our fund savings, how many $1 million last year?
In the
24
general
million.
fund. Sorry, get lost in my papers. In the general fund, 27 million decrease.
$27 million we spent down. Revenues are down, expenditures are up. We had to transfer money into Graysdale because Graysdale is losing money. We had money that was earmarked by ordinance, federal money, ordinance, which is law, which wasn't spent where it was spent. So when someone says it was illegally spent, it's because it wasn't spent the way we, the council, dictated by ordinance, which is law. We're not making hyperbolic statements. We're making truthful statements. Yeah, they might not be, I'm not saying Steve's taking the money and putting it in his pockets, but it wasn't spent the way we said it was. And the audit is looking at the general fund balance and how the county administration does their books. They did their books appropriately, but it doesn't state that they're not losing, they're losing money. We're losing quite a bit of money, and Graysdale's losing money, and we had to spend money that was spent for bonuses, you know, so some people that were supposed to get bonuses might say it was fraudulent, because they didn't get their bonuses, and they used it to spend it on operations, just so they can keep the lights on. So these statements, you know, I'm not trying to make a bigger deal out of it than it needs to be, but it is a big deal, because it's tens of millions of dollars.
No, but a couple months ago, you were saying this was a huge deal. This
It
is
is-
a big
it's a
deal.
huge
Now
deal.
we're backpedaling?
No, it's a
Are you
pretty big deal.
backpedaling now?
I think it's a pretty big deal. I'm not trying to be over-inflammatory. It's a pretty big deal.
Okay.
Anything else, anybody? No? Okay, thank you. Thank you, Jane.
Thank you. Take care, everyone.
Okay, next on the agenda then is review of Administrative Code Amendment, Article 13, Section 1309, Competitive Negotiations. This is the ordinance 2025, an ordinance amending Northampton County Administrative Code Article 13, 1309, introduced by Mr. Capora and Mr. Giovanni. Any questions or comments on this topic? John?
I'd like to make the comment to possibly amend this in the sense that, you know, there could be a $600,000 contract that is run-of-the-mill, might not dictate a lot of eyes on in the procurement process, but there might be a $300,000 proposal or contract that we might want to say, hey, we want 3 people on the, you know, the procurement process for, or the proposal process. So I would like this ordinance to read at the discretion of council. And, you know, we as a body get to make that decision per whatever the proposal, the RFP comes out is. We could keep this as a standard, and then if we have the desire to change it at that moment, we have the ability to. I would just like the maximum amount of flexibility as council.
Yeah, thank you, Mr. Brown. This came to us about a month and a half ago or so, if I'm not correct, if I'm correct. Is this all the same language that was, Mr. Spina, is this the same language, or was this like changed and altered since then?
I had significant discussions with our clerk.
Okay. Were there any parts of this that were initially, I'm just forgetting off the top of my head.
I had some grammatical changes, yes.
Oh, okay, but in terms of the 100,000 to 300,000, one member, 300, was that changed at all?
I don't recall.
Okay.
There was a discussion about the amounts, but I don't remember if it was changed.
Okay. All right.
So just to your point, Mr. Warren, so basically the strikeouts and the underlines should be true for the changes that have been made.
Those are
way
the only
it's
changes?
presented, right.
Okay, those are the only changes? Okay. I was just wondering what over the past month and a half may have been changed. All right, thank you.
Any other comments? Okay. Then we'll move on. Next item is review of 2025 budget amendment. Steve, did you want to talk about this at all? Mr. Barron?
This is just an introduction. I think what you will see on there is you will see grant monies that have come in, state monies that have come in based on what we know about the current budget. I wish I could say that this would be the last amendment. You may see an extra one this year, depending upon how the state budget comes back and what we need to do, and whether we get retro money. So we're in the new state budget year. We know that our allocations are going to remain flat at this point, but we don't know where that's going to go if they don't pass a budget in October or by October. So later this month, the beginning of next month, after this budget amendment hopefully passes, we're going to have to take a look to see where we're at and see what the state does. Most times, there's retro money involved. So when a budget is passed, it is retroactively dated to the date that they were out of compliance, which in this case would be July 1st. My hope is that they do that again, fulfill all the obligations that we have. I don't believe that won't be the case. I think it will be. But I am preparing council and letting you all know that there may be an extra budget amendment this year, and the only reason for that is because of the human services. There's nothing else really in there that should be earth-shattering. I do believe we got a couple other grants. And was DCED included in there somewhere? I think in this one. I think there is some money related to the brownfield sites and the EPA money that, that's the drawdown grant. So I believe that is part of this as well. So I think that's about it. Is there any specific questions that council has?
I have a question.
Yeah.
Okay.
Go ahead, Ron.
Steve, this is pretty much the state. Like every year, we get X amount of amendments to be made, and this year I realized with the budget, the state, you may need another one. But this is pretty much our standard change that we generally get during the year, correct?
Yeah, that is correct, and I did want to put the asterisk there because when I come back later, if there are some changes in the budget, I don't want council to think we screwed up the first one. I anticipate potential change.
I would never think that. I would never think that.
All right.
Thank you.
Yep.
Any other questions? No? Okay, thank you, Steve. Next, we have a review of City of Easton parking lot lease agreement.
Good evening, Council. Earlier this year, the City of Easton had reached out to us to see if it would be possible to lease some of the county's lots to assist with special event parking within the city. There's often a dearth of parking when there's special events going on at the State Theater, or there are larger events such as Bacon Fest and Garlic Fest. So what we're proposing is a lease agreement in which the county would be leasing the 2 surface parking lots that we have on the south side of Washington Street to the city, strictly for after-hours use, 5 p.m. to midnight, when the lots would otherwise be completely empty. It's a 10-year lease agreement. As part of, the city is offering to repave the largest parking lot, the one closest to Praxis, within a 3-year period of the lease being executed, as it is getting to the point where it's going to be need to be repaved and restriped very shortly. Louis Campos, the city administrator for Easton, is also here tonight if you have any questions about it from the city's point of view.
Is that the form of payment? They're going to repave the parking lot? Or is there a monetary repayment as well?
It's solely the repaving.
How many square foot is the parking lot, just to frame reference?
I don't know off the top of my head.
Small, large, like?
It's a large lot.
Questions, council?
Any
Jeff?
increased liability to the county on this?
No. Their solicitor's office prepared the draft agreement. It was reviewed by our solicitors. They're going to provide us with certificate of insurance. There'll be no liability for the county.
Thank you.
Anything else on this topic? No, if not, okay, thank you. And we'll move on, review of area agency on aging gift donations.
United Way
approached the Area Agency on Aging about, they want to engage with senior citizens about budget priorities for the upcoming year to help them in their planning. And they'll be providing lunch, and they're, I also think, partnering with Crayola to provide nice table settings, flowers at each table. So they're going to be going to the, I think, the Bangor Senior Center. They'll be in the Slate Belt. And because we own and operate those senior centers, and these gifts will be provided. It's lunch and I think a
Information,
nice
yeah,
setting, and they'll be surveying the seniors and talking to them to try to assess what their budget priorities will be in the upcoming year.
Questions? Okay, thank you. Next is review of Administrative Code Article 13, Billetier Electric, Inc., Master Mechanical Corporation, and Master Mechanical Corporation.
These two projects go hand in hand. They're both for the Wyatuck Park rehabilitation, where we're going to be installing a new prefabricated restroom, as well as some ADA improvements to get from the parking lot throughout the park itself into the trail. So council had already approved the contracts for the general contractor, as well as the contract for the prefab restroom. These are the two other contracts, the electric and the plumbing, in which they would basically just be providing the connections from the existing electrical service and our septic system, running stub up to where the new building is going to be set.
Questions?
Just a comment, we only got one bid on both, huh? I saw the one that had two failed, what dictated the failed proposals?
We did not receive the bids on the electrical contract when it was bid twice. 'Cause it's a small amount of work.
Yeah, it's a small job. Is it where you guys pretty much expected the job to come in at?
Yeah.
Any other questions, comments? No? Okay, anything else to be brought before the committee at this point? If not, then we'll call for adjournment. Thank you, everyone.